Stock trader demonstrates a normal wave analysis. Stock trader demonstrates a normal wave analysis. We are on a monthly chart of PPG Industry Incorporation, and we want to demonstrate a normal Elliott wave analysis. All right. Now, first thing first, what is a normal Elliott wave analysis? Is an Elliott wave analysis that is not complex. We understand that the Elliott wave analysis can become very, very complex, but this time we want to talk about a normal Elliott wave analysis. All right. So I want to start drawing lines on my chart. Okay. So one example of a normal Elliott wave analysis is this. You will see that the first wave, after the first wave, we have the first wave, and then we have the third Elliott wave. That is the longest wave, followed by the fourth wave and the fifth wave. Okay, right here. During the normal Elliott wave trend, you will see that very often the fifth wave will be the shortest motive wave. So when we are talking about the motive wave, we have three motive waves: the first wave, the third wave, and the fifth wave. All right. The second and the fourth waves are corrective waves. But during the normal Elliott wave analysis, the fifth wave is the shortest motive wave, and the third wave is the longest motive wave. So my drawing here is illustrating a normal Elliott wave analysis wave count. You can see here the first wave is longer than the fifth wave, and the third wave is also longer than the fifth wave. The third wave is also longer than the first wave. Therefore, the third wave is the longest motive wave, and the fifth wave is the shortest motive wave. A normal, motive wave, during the normal motive wave, all right, the third wave is the longest motive wave. The fifth wave is the shortest motive wave. This is a representation or an illustration of a normal motive wave that is relating to the subject of normal wave analysis. So we want to demonstrate to traders normal wave analysis. All right, let's get started. So we can use, if you were using the reference point 2009, which I explained to traders before, unless you are new to our channel. All right, this is the reference point. I'm going to color it now in turquoise. All right, and then we see that the price 2009, the stock market began a bullish trend, and the price went up and then pulled back. Now I'm not going to dwell too much on the wave count. I'm just going to go in straight line, straightforward wave count. All right, so here we have the first wave. You see here, all right, the first wave is either from here to here. That's the first wave, followed by the second wave. And you can see that the second wave did not cancel the first wave. And now we have, the third wave up to this point here, followed by the fourth wave, a bit of pullback here. You can see this candle close here. We can put it like this because the candle close here. Some trader will put it like this. Okay, I'll leave it here like this for now because that's where the candle did close. All right, and then we have you see, if I put at the closing price, you can see that the fifth wave is just this one here. If you compare the length of the fifth wave to the first wave, you can see that can you see on the chart? Okay, from the closing price, I'm talking about the closing price, because if you put it at the tail of this candle, it will disqualify a normal wave count. But because you can see that this candle did open here, all right, price went down here, but did close up here. So I want to put it here like this. So if you compare the length of our fifth wave which is just tiny fifth wave here, to the first wave. You can see that is shorter. If I put it here, is shorter, a little bit shorter than the first wave, and the third wave is the longest wave. This is a typical normal wave analysis. Usually when traders start learning about the wave principle, that's what they are interested in. And this is the easiest Elliott wave count, a normal wave analysis without any complexity at all. The fifth wave, usually the shortest motive wave, and the third wave, the longest motive wave. A typical example of a normal wave analysis. This is a normal wave analysis here without too much trouble. Even on the monthly chart, it's clear to us that everything is adding up clearly. The stock was trending, in fact, from 2009 up to 2000, up to the beginning of 2015. Now a correction is underway. Once again, you can see that there is this pullback, okay? That's the first part of the correction that will usually bring the price to the moving average 50. So I'm going to place on my chart also moving average 50 and see whether the first part of the correction, okay, brings the price to the moving average 50, simple moving average 50. Okay, I want to place on my chart simple moving average 50. I'll color it now into red. My moving average 50, so you can see on the chart. Okay, everything looks very simple, and we can forecast this one very easily. So you can see that's the moving average 50, and the first part of the correction will bring the price near the moving average 50. Now we see the price, so now we are seeing what we call a double retracement taking place here. The price going back up here. This one, if you look carefully, I'm going to go back to it in a minute. All right, stay with me. Now we are having a double retracement. You need to be careful here because there is a bit of hesitation here. The price may go back up. Remember this. We are having a kind of at this point in time, with the information that we have. Let me say this again. At this point in time, with the information that we have, all right, it looks to me that a flat correction is developing here. But remember that we have various type of flat correction. So be aware. Okay, hold on, please. Be aware that we have also an expanded flat correction that we usually. What am I doing? Okay, hold on, please, my traders. I'll get back. I will get there soon, okay? Now, the expanded flat correction can bring the price up to 138.2% Fibonacci extension level of the fifth wave, somewhere here. So be aware of this resistance level, 12908. If you are trading this stock, the price can continue to go up to this point here, 12908. All right, that's why I say the wave count is dynamic. So you see here it's hanging here. You need to be gentle. Use a top-down trading method. You want to trade it, or pay attention to the S&P 500 first. Remember what I say. We are trading first the market before the financial instrument. All right. Anytime you are trading in stock, you must check. Okay, the S&P 500 is at a resistance zone. Is breaking support level. And anytime you want to sell a stock, check the financial, check the economy news, all right? Very important. The natural progression of the price is up. So whenever you want to sell, you are trading against the normal progression of the market, and you must have a valid reason to sell a stock, okay? So here it is. So we are now having a flat correction that is developing. Remember what I said to you. If a pattern, we are trading a pattern is only that pattern until that pattern is completed, all right? So it's developing here. It may continue to go up to 12908 before coming down with what? 5 wave down, all right? Nothing, if the price breaks above 12908 and finds support, do not force it. If it breaks above the final support, you are a buyer, okay? All right. But if it goes up to 12908, you are a seller. You will use a top-down trading method to trade it without assuming anything. By the way, this video is for educational purposes only. It's neither a solicitation or an offer to sell or buy, okay, PPG Industry Incorporation. So this is a normal, wave count, wave analysis. And here again, you can see that the fifth wave is the shortest motive wave, and the third wave is the longest motive wave, all right? Okay? And also, during the normal, very often during the normal, wave analysis, you may see a volume spike during the third Elliott wave. Not always. I will say 60% of the time you are likely to see, a volume spike during the third Elliott wave. But normally, my friend, the volume spike usually takes place at the beginning of the trend. So you see here, there was a volume spike here. If you want to learn to master stock volume trading, go to dayprotrader.com, where I'm busy, sharing a lot of tutorial about how to trade the stock volume. Or if you are trading stock, subscribe to Day Pro Traders YouTube channel. So during the normal wave analysis, we usually see, not always, I need to mention this and clarify this, not always, but something like 60% of the time, you may see a volume spike during the third Elliott wave. The reason is after the first wave and the second wave, the price going up because now you can see that at the beginning of the trend, we have a volume spike, not too much, all right? Which means, let me put this to you in a different way, is that what usually takes place is that the smart money, all right, the smart money, should I say, are they relaxed about the stock? Or should I say that they are not very, very excited about the stock, so to speak? So at the beginning of the trend, you can see that the volume spike is average. The volume spike went to 126 million shares. Now, during the third Elliott wave, here we have more than 200 million shares being transacted. So there were few market participants, hedge funds, institutional bank that bought it here, all right, in a zone of 127 million shares. And now again, somewhere in the middle of the third Elliott wave, now they become more interested in the stock. And now we see more than 2 million shares being transacted. This is a typical pattern that you will see during the normal wave analysis. You need to be careful because this is not an exact science, all right? We are talking about 60%. We are talking about probability, all right? So don't take it as a sign. Use it as a guide, Very important. Use it as a guide, Something you can work with, all right? Something that can help your wave analysis. So to differentiate, is this a normal wave analysis? Is it a complex wave analysis? What is happening, all right? Very often, at the beginning of the trend, you see a lot of volume spike. Smart money will buy at the lowest price, somewhere like this. You see a lot of volume spike, tall volume bar, and then the price will go up under a light volume. All right, I would like to recommend to traders a video that I will be posting at Day Pro Traders. Can a stock rise under a light stock trading volume? Check it out. I would like also to recommend to traders to check this video. Is this the most profitable stock volume trading method when we see a volume spike during the third Elliott wave? Check those videos out at dayprotrader.com. If you check it out, you couldn't see it, you know that I didn't post it yet, but I will post it by the end of this weekend, all right, definitely. So here it is. We have the fifth wave should be the shortest, all right, and the third wave should be the longest, and 60% of the time you may see a volume spike during the third Elliott wave. And the first part of the correction, we bring the price to the moving average 50. Generally, we see that, So when you have a normal volume analysis, you will see that not too much complication. You can forecast what is likely to take place once you count 1, 2, 3, 4, 5. And you notice that it's a normal wave analysis. You know that there is a high chance that the price will come to the moving average 50. We found in support. And then go back up a bit, But be aware that this stock is now forming a flat correction. The pattern is not very clear here. It's hanging here. It's a bit tricky now. But be aware of it. It can continue to go up to 12908. But remember, if it goes above 12908 and finds support, we are trading the price before anything else. All right, this is just a quick clarification of a normal wave analysis. Very simple, straightforward, all right? Characteristic, usually the fifth wave will be the shortest, all right, a multi-wave, and the third wave will be the longest multi-wave. I can go on and on, giving you more explanation about normal, wave analysis. But with this information, that's enough for anybody to be able to detect whether this is a normal, wave analysis. The takeaway here is that the fifth wave will be usually the shortest multi-wave, and the third wave will be the longest multi-wave. 60% of the time, you are likely to see a volume spike during the third in your wave, all right? But for instance, if you have identified normal wave analysis, but you see that you did not see a volume spike here, you will see a volume spike at the beginning of the trend, all right? But as always, when you are applying the wave principle, do not use it as a sign, okay? You know something, you are expecting something, now wait for the price to confirm it before you jump on it. In all cases, do not violate the market pattern and use a top-down trading method. This is the end of this tutorial about a stock trader demonstrate a normal wave analysis. We are the TSTW24 traders talking about stock trader demonstrate a normal wave analysis. If you have any question or suggestion, well, this is the time to put in the comment section, and in due course, I will be recording another video to answer your specific question. Happy trading to you all, and speak to you soon.